The S&P 500 is down 1.5% on futures. Nasdaq is down almost 2.5%. Small caps down 3%. Everyone is in panic. There's a lot of noise, a lot of stories around Trump's tariffs of over 25% on Canada and Mexico, 10% on China. And this is my second video for today. And I don't do this very often, but I really want to talk about this whole setup and mainly help you avoid the most common mistakes that most of you guys are going to make if we are having a pullback, if this is the start of a major decline, and it looks like it is. I'm going to talk about it, and I'm going to tell you the most common mistake a lot of you guys will make, and then I'm going to give you my opinion on a few stocks that I'm looking to buy if we do have the upcoming pullback. So I really hope you enjoy it. And as you guys know, the tariffs did happen. You know, Canada retaliated with 25% tariffs. Trump did mention that if Canada retaliates, they're going to double them to over 50%. I'm not sure if that's going to happen, and it would be really bad. But this is what he said, and so far he's been doing whatever he said. S&P, Standard & Poor, they estimated that the 25% tariffs would send the Mexican economy into a recession. It's really bad. So it's not just bad for the United States. It's really bad for Canada. It's really bad for Mexico, because over 80% of Mexican exports and 75% of Canada's exports, they go to the United States. So putting a 25% tariff on them, even potentially 50%, it's going to be really bad for those countries, but it's also going to be very bad for the United States in general. And he even wants to implement tariffs on the EU, on the European Union. And again, it's really bad. And the worst part about it all, he said he's not too concerned about market's reaction to tariffs. So before that, you know, he kind of measured his success amongst other presidents about how good the S&P is doing. And now he's saying that he doesn't care too much about what the market does related to the tariffs. And this is, again, causing a lot of fear in the market. It's causing a lot of uncertainty, a lot of doubt, whether this is true or not. But, you know, this is what he said. And it's causing a lot of fear, a lot of different doubts. Even Bloomberg, they estimated that over $1.3 trillion worth of goods are going to be affected, and it could reduce United States GDP growth by 1.2%, and it could add 0.7% to the core PCE, which came in at 2.8% on Friday. So just when we started making progress on inflation, just when the market priced in, you know, a few rate cuts for next year, then we have, you know, the tariffs that going to cause core PCE to shoot up a little bit higher. Auto prices and car prices are going to go much higher. Even home builders are going to suffer a lot from crunch in lumber, and their margins are going to get squeezed, and a lot of bad things could potentially happen that could lead to a pullback. Now, we don't know if this is going to be a sustainable pullback. We've seen some in 2016, and it was not a sustainable pullback. We did have a pullback 2016, 2018. Then the market went up. It was quickly bought. And I believe this is going to be the case also. Unless this is the start of a major bear market, it could happen. But again, I don't really know. And the truth is, and this is what I want to talk about in this video, is no one really knows what's going to happen. No one really knows if the market will continue going down and by how much the market will continue going down. And whenever you have something like that happen, you start having a lot of noise. And everyone on YouTube, everyone on Twitter, they all become economists, they all become tariff experts, just like they became more experts before. Every time some banking expert and SVB, Silicon Valley Bank, they all become experts whenever we have a sudden event. And a lot of you guys would start consuming this information, and you would get fearful about potentially buying stocks, and your mindset would shift from a long-term focus to a short-term focus of you looking at economics and trying to find a catalyst that would cause a bottom or it could cause a shift, and you would all of a sudden be trying to time the market, or you would be looking into opportunities where you could benefit in the short term, such as buying maybe steel stocks because they could do well on tariffs, or doing something else with lumber, or buying some company in another country that ships something from Canada into the United States to avoid tariffs. All that stuff is short-term noise, and all that stuff will cause you just to lose a lot of money. It's a major mistake. And the worst thing you could do in events like this one, in events like SVB, in events like DeepSeek, in any kind of event, is do any kind of short-term trading and buy into the economics trap kind of noise that would somehow tell you when you should be buying the dip. And the truth is, no one really knows when you should be buying the dip, when what will cause the market to go up, and what's really going to happen. And October of 2022 really proved us that. And this is the worst thing you could be doing. Now, the best thing you could be doing is buying stocks that aren't just good for right now. They're not just good for steel on tariffs or whatever it is. Stocks that are amazing for the long term. Stocks that are going down because of no reason, because this tariff thing is not really going to affect them a lot. Those are amazing companies that will continue doing well no matter what, but they're selling off because of the short-term noise. Just like when I bought, again, the ASML on a deep-seek sell-off on Monday, I got the stock at dirt cheap. It's already up 13%. And this is how I got stocks like Constellation Energy, which is up over 95% from August 5th when we had a sell-off that was nothing related to, nuclear energy was still fine, and a lot of the AI stocks were still fine. And this is what you should be doing right now. You should not be watching tariff kind of content. You should not be trying to assess the economy, trying to predict and time the market. No one really knows that stuff. And if I was you, I would be focusing my energy into analyzing stocks that I could buy in this market pullback that have nothing to do with tariffs and are going to do amazingly well no matter what. And I'm going to give you a few ideas. One of them is actually, a Canadian stock called Constellation Software. This is one of the best stocks of all time. Most people never heard of the company. Amazing CEO, amazing culture, amazing growth in general. It's just an amazing company. Now, if this stock starts going down because of tariffs, and this company will do well no matter what, I would be very happy to be buying the dip on something like Constellation Software. And you could research the stock, and it's just an amazing company in Canada, which could get hit a little bit more. Another one I'm looking at is Microsoft, for example. This is a stock, again, has nothing to do with tariffs. They're going to be fine. The economy will slow down a little bit. Microsoft will be fine. It's going to be fine 5-10 years from now. If this stock starts selling off and it gets to my fair price of $375 or below $370, I would love to be buying something like Microsoft. And this is what I'm putting my energy into analyzing stocks that will do well no matter what for the long term, not just for the short term. Another one is CrowdStrike, for example. This is cybersecurity. I don't care about Canada and Mexico, what's going to happen. Cybersecurity will always be needed. And if this stock starts going down, I'm a very happy buyer to get exposure to cybersecurity in my personal portfolio. And I share everything I do and what I do them in my own group. This is the link if you're interested. But my main message from this video is no one really knows what's going to happen. No one really knows how much the market will go down. No matter how many economics video you're going to watch, you're not going to know when to buy the bottom. You're not going to know when to time the market. You're not going to know what you should do. The only thing you could do, the only place you have an edge, is researching companies that will do well no matter what and buying the dip on them. When people are so focused on short-term stuff, you're focused on the long-term thesis. This is how the money is made in the market. And those are always, always, always the best buying opportunities whenever a stock is going down for a reason not related to its long-term fundamentals. You could recall 2022. You could recall SVB, Silicon Valley Bank. You could recall August 5th, which was a big dramatic event. You could even recall DeepSeek, which a lot of those stocks sold off and they presented amazing opportunities. And this is all I had to say, not financial advice. I hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.